First of all, thank you so much for chatting with me, because when I asked my audience what are the things you want to learn about this year, by and large, finance and investing was the number one thing. So I know I'm not alone here. Um, so I immediately thought about you. Can you just introduce yourself and tell everyone why I have you here today?
Thank you, Natalia. Yeah, of course, I can introduce myself. So, hey, everyone. My name is Delano Saporu, and I'm so excited to join and really just be able to talk to you guys a little bit about myself, a little bit about finance, investing. I know it's such a hot topic and one that we can all continue to learn more about. A little bit more about me. I'm from Minnesota. I live in New York with my girlfriend in the Manhattan Island, and really love it. And I'm a financial advisor, founder of a registered investment advisory firm that does financial planning, retirement investing for clients, as well as public and private market investing for clients, whether it's the crypto area, the venture space, and the public markets as well. So that's a little bit more about me.
Delano, I actually met you. I was introduced, but we had some mutual friends, and
Yes.
I had so many questions, and you were so helpful in explaining and walking me through. I should tell everyone, Delano is my financial advisor, so I am personally taking all of this advice. But also, I just think it's so important to be literate
Yeah,
in in finance and what you're doing with your money, and you've
exactly.
really helped explain it to me, not make me feel stupid, and walk me through and tell me, share some of what you've learned. So I think it's such a treat to have you here today.
The reason why I started my firm was because I wanted younger people to get literacy from in a non-stuffy way. And I have to give you credit because you ask great questions, but you also absorb and take it in. Because I've seen so many people do different things when they're starting with their finance. There's so much information, but if you can get it from a trusted space, it bodes well. So that's a great point you bring up.
That's the hardest thing. I think there's so much information out there, and it can be really overwhelming, especially for someone who this is not their field. I got some amazing questions from my followers who are super excited about this conversation. I
Yes,
wanted to structure this in just an intro, very high level, and then we'll get into some more detailed questions
of
as we go on.
course.
But just to start off, and again, there's no such thing as a dumb question.
No.
So I'm just going to lay it out. What is the stock market? And
Yeah,
like,
yeah.
how do you even get started?
Yeah. No such thing as a dumb question. These are all things that people pick up at different times. So, what is the stock market or the equity markets? It's really just a place where everyone can buy in meaning buy shares of a company, right? So, the reason why companies go public in the first place is to raise equity from the public markets, from everyone. It widens out the amount of people that you can have as your investors. And so, as investors in these public markets, we are able to assess companies and buy a piece of that company. And why are you buying the companies? It's because you're buying in for future expected earnings or growth, is another way of saying it. So, when you're buying a company, you're not buying the company so your shares can devalue, right? If you're working with an expert that actually understands the markets, they're going to buy these companies that they expect the value of your shares that you own, that you paid for, increases as the company grows and create and his ability to return earnings to the shareholders.
Okay, so I'm with you on what a stock is and shares in the company, but then I've also heard all of these terms like ETFs and
Yes,
index funds, and then there's so many other things that come up. So can you lay out what are some of the most common investment products that one can have in their portfolio?
100%. So you says individual stocks. So you can buy individual stock in a certain company. So that's a single name exposure to a stock. And yes, there's ETFs, which ETFs are exchange trade funds or a bundle of certain investments. So ETF trades similarly to a stock, but in that situation, they add a level of diversification. So instead of one single name stock and company, you're bundling in a bunch of securities or a bunch, it could be stocks, it could be industries into an ETF to one, give the investor a little bit more diversification. It could be to a certain sector. You can buy an ETF in the energy sector. You can buy an ETF that follows the Dow Jones, which is a public broad market index. But that allows the investor to get broader exposure and diversify as well. And then you can also buy mutual funds, which mutual funds are actually losing popularity. As of now, a lot of funds are flowing, money is flowing out of mutual funds into like ETFs and stocks because, as I mentioned, those ETFs and stocks trade intraday. You can buy a stock in a certain day and trade it that same day. Whereas a mutual fund only trades at the end of the day. But the mutual fund acts similar to ETF in the sense that it's a collection of stocks and bonds within one single security. But that's the kind of the high level of the stuff that you can invest in the public markets. Like you have the stocks, you have your ETFs, and you have your mutual funds. And it's important to note, within ETFs, you can buy bond ETFs and bond mutual funds as well, and all these different things. But the high level nuances of it is those three securities.
Yeah, and something else that's interesting, you said you can buy a bundle. That's where you can say to your financial advisor, do research on your own, things that align with your values as well. I think
Yes.
if you're really interested in tech, you could find an ETF for that, or sustainability or whatnot.
Yeah.
Is that right? You can cater it to your knowledge
100,
level or values.
100%. Yes. You are so correct in saying that, because yes, those ETFs, they can track certain things, whether, like you mentioned, a sustainability type ETF or tracking the tech sector. I know someone that really knows that sector as well as the healthcare sector in different areas, but those ETFs allow you, who are a smart and competent advisor, to be able to get exposure to that area at the right times, at the right allocation of your funds. And so that is exactly right. It allows people to get exposure to different sectors and to follow their moral compass when it comes to investing.
I want to just lay out the vocab here, because like, you know that you want to start investing, but then you get all these other terms like a brokerage or an
Yeah.
IRA and different things like that. So
Yeah, 100%. It can be super confusing. And obviously, I think the best thing, and especially in this area, you're smart to do it, is working with the planner. Because even if you hear this from me or from someone else, or you read a bunch of articles, you're ultimately going to forget or not know all the different intricacies of it unless you've been in this for a long time. So let's break it down. If you're someone that works in corporate or has a W-2 income, that would mean you would probably have exposure to an employer-sponsored plan. That's a fancy way of saying a 401k or 403b, where your employer puts money in, possibly matching the contributions you make every paycheck, right? It's a simple retirement plan. And now let's break down the other areas. The government said, hey, people have these employer-sponsored plans, but maybe they need another way to save for retirement. What are other tax advantage ways we can do that for them for retirement? That's when IRAs came about. There's IRAs, or individual retirement accounts, to allow people a tax advantage way to save for retirement on their own outside of employer-sponsored plan or in conjunction with an employer-sponsored plan. So you have many different names for all these IRAs. So traditional IRA or rollover IRA or contributory IRA is a pre-tax IRA, meaning those contributions are pre-tax. These are not being taxed now, but when you withdraw and live off your nest egg, the government will take their cut at the withdrawal. Then there's the Roth IRA, which is an after-tax investment account, where the government says, okay, everything you put in there, we can delineate as after-tax, meaning when you withdraw and live off those funds in retirement 2 decades from now, you won't pay taxes on it, because we delineated those specific funds that you contribute to the Roth IRA as being after-tax contributions. And then, as you mentioned, the last basic account is a brokerage or individual investment account. It's a regular investment account that we use to invest for either medium-term goals, longer-term goals, for some people short-term goals, but that's the
so now we get to go a little deeper into the fun stuff.
Of course.
We've talked about stocks and funds. What are your thoughts on crypto? Is this something that people can be adding into their portfolio?
So yeah, of course. Personally been invested for a while, a long time. And then I was one of the first advisors that was managing cryptocurrency for clients, over 350 households that I help manage, whether it's professionals, entrepreneurs, like yourself, athletes. I believe in it because if you're looking at the technology, if you're looking at the high growth prospects for something that Bitcoin, the white paper is only 13 years old, if you're looking at how it diversifies the people, the look of people that are involved in it, right? Like the numbers of people that are either young women or minorities that are involved in cryptocurrency are way higher than are in traditional finance. So certainly, I think I caution that with the saying, people don't get in it just because you're like, hey, I'm going to buy this altcoin, it's going to blow up for me, I'm going to become a billionaire because of that. No, that's not the emphasis. The way I look at it for clients or the way I invest with people, it's always long-term, smart research investments. So we only go into tokens or products that we fully understand. But yes, it's an area that people should be exposed to, especially younger people, because if you have a longer investment horizon, you should have exposure to something we believe is a high growth asset.
That's really interesting to think about. So being in the financial industry, in the thick of it, you do see it's becoming mainstream essentially.
But yes, I still on the frontier. So you're seeing a lot of more smaller, what they call retail investors getting involved. You're seeing institutions get more involved. You're seeing countries legalize Bitcoin as their legal tender. So yes, it's still at the forefront, right? It's still early, but you are seeing more mass adoption, and you're going to continue to see that. I think the ball keeps rolling on that because people are getting more educated, but it is something I think adoption is increasing and will continue to increase.
Yeah, there's so much to talk about in this topic. I'll save it for another conversation. It's something I'm definitely going to be digging into more on
Of
this
course.
platform. But to stick to investing, now I have got some great questions from my followers. So, one person's interested in knowing if you prefer active or passive index management. And can you explain what the difference is?
Yeah, that's a good question. Active management is the form of an investor rebalancing or buying or selling based on things they're seeing in the market, similar to what I do as an active manager for my clients. It doesn't mean you day trade. It just means that you are making investment decisions more actively within a certain portfolio versus passive management is just buying, letting it ride, and not doing any rebalancing or making any moves. It's a preferential. I definitely think there are times to rebalance, right? If you look at it, for people that bought a bunch of growth stuff that they didn't know what they were buying and they just follow people into like ARC or AMC and they bought at the bottom and now it's cratered, like there's an advantage to being active and maybe before the year started, you could have sold your huge loss position and got a tax harvesting play. So if you sell a stock or ETF or whatever at a loss, it's called tax loss harvesting. You can use that to write off on your taxes. You can say, hey, I lost X amount on this. You can write off on your taxes and it increases your refund amount. Or if you're someone that's an entrepreneur like myself, it decreases the amount that you pay to the government at the end of the year. So I think there's advantage to active manager. Active manager, of course, I'm biased, but I understand when to make different plays in the market. For a lot of my clients, they're putting in money into their accounts monthly, so that allows me to, whether it's buying an index or a stock that I know and continue to follow into their accounts. So we lean more towards that. And again, it doesn't mean day trading. It doesn't mean you have to do something every month or every even few months. It just means that you're able to rebalance when needed.
Yeah, and the way that I see this, and I'd love to know your thoughts on it, it can get very tricky for some people, and
Yeah.
this is where it can get risky. You can either choose to just pick a few ETFs, have your account on autopilot, save a certain amount of money, whatever you can each month, and just let it run on autopilot and forget about it for 20 years. Or you can go the route that I chose to go, which is have a professional do it because I don't have the time or the knowledge to really research these avenues that I can take or the different products that I can invest in. Or if you are going to be actively trading, either like you said, it doesn't have to be daily, but regularly, or managing your own portfolio and not with a robo advisor, or you want to do it yourself, which is awesome, more power to you. Really research what you're doing and I guess be as informed as you can and not jumping on trends or like
Yeah.
trading back and forth because that's where people can get in trouble. Is that kind of a good way to
That's really a great way to put it because as you mentioned, you know, I've seen it plenty of times. Is like you said, jumping on trends and doing different things. Again, if it's my clients, I tell them what I believe because I'm here to do what's best in their advantage as a fiduciary. But you do see in the general scene, 200% agree with you when you're saying that's a general, people make mistakes and you're like, could have avoided that.
so people's options are basically you can do the robo advisor, you can do a financial advisor, or you can manage it yourself, but just know the costs and the risks associated with either. Just
100%.
invest as long as you're doing something. You're already.
So true. Exactly.
How do you see the future in the financial markets?
Love this question because everyone wants the crystal ball. They're like, at this day, you have to sell because everything's going to happen. There's no one in the world, not even Warren Buffett or anyone that you guys think is a famed investor that can tell you when the bottom is or when the peak is. But let's stick to that question. So what we had over the last couple of years, even during this horrible pandemic that we're still in, was we had an incredible increase in the markets based on a lot of different things, right? You saw the government do a lot of bailouts and printing of different things that helped inflate asset prices as well as help stabilize people that really needed it in this time. You saw corporations switch from being in office to IT infrastructure that made things more efficient and corporations had stronger earnings. So it was a lot of boom times, and especially if you're talking about the equity markets over the last couple of years, that as we're seeing it this year, when we're going to raise interest rates, we're going to curb inflation, we may not see that same bullishness in the stock market, especially just in this year. Yes, over the next 3, 4, 5 years, I certainly believe that where we're at now, the stock market will be higher than it is right now. That's just if you look at historical times, there isn't a really prolonged down times in the market. Our last bear market was the shortest bear market we've ever had in the history of the stock market. So it'll be higher. Things will be higher, whether you're talking about mega tech, FANG, things will over a long period of time go up. That's why, as you were pointing out earlier, we continue to invest over a long period of time, especially for younger people, because it bodes well for us. I do think It's going to be interesting to see where people start to look for more opportunities, whether it's crypto market, whether it's the early stage venture market that we're closing in a first deal on. It's so interesting. You're going to see more people shift towards that because I think there's a lot more alpha in those markets, meaning gain over above and beyond indexes that can be garnered in those markets. So it's going to be a lot. I think one, younger investors, if you're newer to this, speak to someone that can help explain this to you or help you onboard and get invested because it's really crucial for yourself. We're thinking about inflation again. It's not going away. So you're just having money in a bank account. You're losing purchasing power, your real return, which means your return rate with inflation added in is already negative because inflation stayed at 7% per year right now. Definitely something for people to consider as they think of the outlook of the markets and their money.
So you don't see inflation going down, and that's not going to change, and interest rates are going back up.
So the rate at which inflation is increasing will definitely slow down at some point, but it's still so high at this point that it's hurting a lot of people, whether it's lower wage jobs or whatever, it's hurting people across the world because if you make a certain amount per year and the cost of everything is going up, presumably if your job didn't also follow suit with a wage inflation that we're also seeing for high skilled jobs, then yeah, those people are being hurt. So it's going to be something to think about, especially if you're looking for how your money's being allocated. If you have money in a checking or savings account, if you're not gaining on it because the bank is only paying you 0.001 interest, then you've lost money because the cost of everything went up.
Yeah. You touched on something really interesting previously, which was emotion. And
Yes.
this is something that isn't talked about enough, but it is so tied into the financial world. The
Yeah.
stock market is essential, especially now that companies are not even really producing tangible products as much. Like
Yeah.
so much is emotion driven.
Yeah.
And I'm thinking of how people's emotions are involved in this, and then also inflation. And it just makes me think of sometimes just having that cash under the mattress or
Yeah.
just looking at your bank account and seeing that you have like this money. Of course, the safety net is important, but just seeing that, like, it
Hmm.
gives a feeling of comfort. But it's important to also know that if your money, a significant amount of it, is just sitting there, it's actually
Hmm.
not serving you
Yeah.
necessarily in the long run. And that's where our feelings can get in the way of what is the most practical decision. And it's really
Yeah.
important to take a second to analyze the big picture.
100%. That's hitting the nail on the head. I had so many questions when I first started in my firm. That probably was more of a sticking or something that I had questions like, oh, I see it in there. But now to younger people are just like, I'd rather see it in the stock market growing versus seeing it in my bank account because everyone's eyes was opened through 2020 because of what was going on in the stock. Everyone's like, wow, wait, I didn't know that I could have access to this through it. I didn't even know I could have an advisor. I didn't know I could have access to investing. I just thought it was for X Y people that had 30 million, 40 million, whatever. People's eyes were changed. The Pandora's box was open. And I think now more than ever, the amount of people that are investing or at least trying to learn or work with someone on it is grown more than ever. Yes, I just say it's great to have emergency funds and all that stuff. So I'm not pushing everyone to just invest all their money. I think it's a balancing act. Your money's flexible, can be put in different places. And so you have to understand where it best serves you for sure.
The field really has opened up so many more people. And this is just one of the industries that I think has been so democratized, and there's so many opportunities. So that's an exciting way to look at it. I want to talk about you a bit more personally, and then your profession and how you work, and then also in case there's some useful information for people interested in getting into this industry. So I'm curious, how do you work essentially? What are the different services that you offer? What's your fee structure? What do you do exactly?
Great question. It is a tough question because there's so much, like we were talking about earlier, there's so much literacy in different posts, and people get confused on what a financial professional is. There's definitely different tiers, right? So I'm a registered financial advisor, financial planner, investment advisor, asset manager. All those things fall under the same umbrella. What I am not, and I'm not saying these are bad, it's just different from what I do. I'm not a broker and or insurance broker. I don't sell insurance to my clients. I don't get a commission for selling any certain products. My term, I deal in the realm of fiduciary. So I'm a fiduciary and I work in my client's best interest. And the way I'm structured is my clients do well, I do well. So I manage assets, meaning I invest for clients. And I also do financial planning. I think that's still an important part of things. We still do talk about that. So that's one area as well. And again, I'm also different from my financial coach, which again, not saying they're bad, but financial coaches aren't able to, one, give explicit advice or actually manage assets. They do sometimes post literacy, do different things, but I provide those for my clients too. So when you're talking about financial planning, helping people get retirement set up, savings, budgets, and asset management, meaning invest and manage the assets for my clients, as well as our venture stuff. The venture stuff is super exciting because I know for younger people, they're not thinking about it now. Before they thought the stock market was just for the wealthy. Now they're like, oh, it's for me. And now they think venture investing is just for sold the business for $50 billion. But no, it could be for other people. We're changing the way it's being done and democratizing that as well. So that's the services. I think it's really exciting. As a registered independent investment advisor, work with a lot of great people, and it's especially including yourself. It's really great to do this.
Yeah, tell me a little more about the venture capital work that you're doing. That sounds really exciting.
Yeah, I keep bringing it up because it's so exciting. Because I was on a call. We're closing on our first deal, which is an NFT minting
Ooh,
platform that will be announced later. But it's in conjunction with what I'm doing. Because if you see, asset allocation is important. My clients are going to be able to have assets in the public markets, cryptocurrency assets, as well as assets in the private markets as well. We saw the three pillars of what New Street is doing, a new way of doing Wall Street, my firm. And so we're fearless in what we're doing. It's really exciting. It's a lot of work to one, find the right venture investments to make and to pull everybody together and really, but it's fun stuff. I think, one, as an advisor, I get to do a lot of great stuff and see people throughout their life cycles. I have so many clients that bought houses, get married, done different things, moved, so many different professional achievements. I get access to that and to help them with that. And we plan for that.
that's super cool. That's really exciting. I would love to hear more as this NFT project develops. That's something I need to do a video on NFTs. I need to do a video on
Yeah.
cryptocurrencies, but keep us posted on that because that's really exciting. Lastly, this is a question I get all the time, or just comments that I see all the time. Just people saying, I want to get started, but I don't have
Yeah.
enough money.
Yeah.
So, what is your advice to people who really do want to plan for their future? They want to
Yeah.
start investing, but they feel like they just
That's great. So a couple things on that. I think one, you can get started wherever you're at. That's the way I built my firm. Is like I said, I don't care what your asset size is. I don't care what your goals are. We want to work towards them, and we can do stuff now that will benefit us for the future. Let's say you're working to get out of debt. Sure, let's create a budget. Let's figure out how we're attacking the debt. Are we using the snowball method? What are we doing to pay off all our debt so that we can have discretionary capital to start investing? So I would say don't be intimidated by not having enough. There's no amount that's needed to be able to create an account. Have it. You can have an account sit on zero until you're able to put your first $50 in. That's the emphasis of what we're doing, is making sure that everyone's starting. Because if you don't start now, if you don't have a plan now, if you're not working with someone now, when you do have enough, you won't be doing it because you won't have built that habit of already saving, or already doing the right thing. So you need to start
can't.
wherever you're at, because that builds the habit of, oh, okay, hey, I just got a new job increase. I'm going to allocate more percentage of my check towards my account because I already know that's the right thing to do, and I'm seeing it growing because I started doing this 2 years ago, rather than, oh, okay, I'll wait till I get money. That's just not the way it should be done. If you look at any investment calculator, if you're young, starting early with whatever amount you can will bode well from you 5, 10, 15 years down the road because of the way compound interest works, the eighth wonder of the world.
Tell us before we sign off, compound interest. That's super important.
Of
What is that?
course. Compound interest is the eighth wonder of the world because it literally just says that if you have $100 and you are investing that and you get 8% return, right? So you make $8, so now you have $108. That is telling you that instead of getting interest on the $100, you're getting interest on $108. So it's compounding on the amount from the year prior. So that's compound interest, which is called the eighth wonder in the world, because it's telling you, hey, invest, save, let it compound, let it grow, because you're making money on the money that you've made based on returns. And so that's a great point to emphasize with younger people or investors out there, is that no matter where you start, it makes sense because you get the benefit of compound interest, which will bode well for you over time.
Fantastic. Look, I cannot thank you enough. I know you are extremely busy.
I
This
appreciate
means
it.
the world. It's been so helpful. Before we sign off, where can people find you,
Yeah,
learn more, and just stay in
of
touch?
course. Yeah, Instagram is Delano.Saporu, same with Twitter. Yeah, send me a message. I love to connect with people and just hear them out. Podcast is your money, your life. You hear my unedited raw thoughts on there. If you're, but no, I appreciate this.
Great. And it's more high level than this conversation. So if people want to go deeper, definitely subscribe to the podcast because that's even more information.
I appreciate it. This is fun. I appreciate you.
Yeah. Thank you. We'll be in touch. It
Of
was so
course.
great to see you and speak with you. Thank you.